entire career in the public securities markets, I've been a research analyst and a portfolio manager for mid and small cap stocks. The stock market and its sectors experience periods of overvaluation and undervaluation. Currently, small and mid-cap stocks appear to be in a period of extreme undervaluations. Multiples are as low as those witnessed in historic depression periods. For the last 10 years, small and mid-cap stocks, as indexed by the Russell 2000, have underperformed the Standard & Poor's 500. Funds inflows into the S&P 500 have been predominant. Fund outflows, conversely, for small and mid-cap stocks have resulted in net liquidation. Also pressing small cap and mid stocks down is the lack of research coverage. Approximately 80% of small and mid-cap stocks have market caps of 250 million, which have no research coverage. The other 20% that do have research coverage are usually only covered by research that's driven by investment banking fees, and that research, as a result, is not unbiased. The second major trend affecting small and mid-cap stocks is the absolute decline in the number of public equity securities. In the past 15 years, the number of listed companies has declined from 8,500 to 4,500. During the same period of time, initial public offerings have declined from approximately 1,000 a year to 200 a year. Many successful entrepreneurs have decided that being public is too expensive and too regulatory intrusive. Also, shareholder litigation actions prove to be bothersome and expensive. Good companies can stay private and get the growth capital they need from private equity. Several years ago, Michael Dell took his company public, saying being private has unleashed his employees to be more creative and more inventive for his customers. The third major trend affecting small and mid-cap stocks is that private equity has become the tail wagging the dog. 5 years ago, private equity had approximately $1 trillion in assets under management. Now that number has risen to $5 trillion. Private equity has more cash reserves than deals available to purchase. Private equity now is moved to a point where it will pay higher multiples for public companies than comparable companies have been valued in their own internal portfolio. Recently, the Berkshire Hathaway Corporation, headed by Warren Buffett, was bidding for a very large high-tech company and was outbid by Apollo, a private equity firm. In summary, the dysfunction in the small and mid-cap public securities markets has created some extremely interesting investment opportunities. These situations are either under-researched or they're about to experience a significant catalyst, such as being bought out by a private company or another public company. Additionally, there are other catalysts, such as regulatory approval, unanticipated because of insufficient research. It is the mission of AlphaVestCapital to find and research these opportunities and provide written research reports on each one of them in our model portfolio at our website. Our Omega service is a service whereby we make available myself either via cell phone or written communication via email.